All right, everybody, let's do an update. So the stock market sold off a little bit today. It was down more earlier in the day, but then it had a late recovery, and actually the S&P closed down fractionally. Dow was down 30 some odd points. NASDAQ was down a little bit too. And the whole thing was attributed to the flare up in tensions, the ratcheting up, the saber rattling, if you want to call it that, between the U.S. and North Korea. Trump yesterday, we will meet them with fire and fury. So that's what they're saying. However, I don't know. I mean, if you look at the Dow transports, as I've been talking about, those have now experienced a 6% correction, and they have not really bounced back up. I mean, they've come back up a little tiny bit off their lows, but they're still kind of hanging around down near their lows. You have the Russell 2000 small caps now trading at that index is trading at the lowest level since June 22nd. You have the Nikkei index last night, which dropped. That probably more likely on the North Korean news, but that is at the lowest level since June 1st. Okay, so little by little, you're starting to see some deterioration in some of the market averages. Not all of them, obviously, not all of them. You also see some deterioration in the price of Amazon stock, okay? Not Apple. Apple keeps going up. So it's kind of a mixed picture, but I'm keeping an eye on those other indices, which have been showing some weakness. They peaked in July, mid-July for the Dow transports, so the late part of July for the Russell 2000. Keeping an eye on those things. Maybe that's an indication that this kind of wild rally that we have been on. And again, there has been all of the things that supposedly triggered the rally having to do with Trump's promises, the tax cuts, the infrastructure spending, all that kind of stuff. None of that has happened. But I did say that the fiscal flows are supportive, okay? They're not growing very fast as compared to last year. And last year we did have very nice back and forth action in the market for a long period of time. Fiscal flows are expanding at about half the rate of last year. However, we are talking about a higher level of absolute spending than last year. And last year we just missed making an all-time record. So we could do that this year. We're going to be very, very close. The all-time record in spending was 2009, and that was the year of the fiscal stimulus. All right. So we have that. Gold. Let me talk about gold because I have been staunchly bullish on gold. We had some mousy boys here last month mocking me when it went down to 1204 or low 1200, saying, "Oh, I just bought gold as per Mike Norman's recommendation, and the bottom caved in." The guys should be thanking me because if he held on, he made a lot of money. Gold up above 1280. The speculative cohort, the speculative position, I'm assuming has climbed up further. It did bounce up, but we are nowhere near the net long position that we saw last July, last August. We are way, 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 way down. And I said, if we get through this month, if the gold market can absorb the supply that is hitting it this month, because we've had well over 3,000 delivery notices, 300,000 ounces of gold, more than 10 tons of gold stand for delivery. This is an active month, August. It's an expiring month. So if we absorb this supply here, I said September all the way through to December, I think looks very, very good. What else? Today there was a release, the JOLTS, the job openings number that is released every month. A record high number in job openings that was trumpeted and talked about, and everybody rah rah. But what you didn't hear was that the number of hires fell. Okay, so you have record amount of job openings, but the number of hirings is going down. What is causing that? Most likely, they're not finding people to fill those positions. Tightness in the labor market, all right? And that could end up pushing up wages, and that's inflationary. Again, I've been talking about the inflationary scenario. The Fed, and the reason why the bond market is very, well bid is because the Fed, remember Yellen last month saying, hey, we're near the end of our rate hikes, but they're not, okay? That's what they think, but they are not. They say they will look at the inflation data. That was in their statement from the last meeting. They're going to be monitoring the inflation data, and mark my words, that is going to go up. So the Fed will do an about face on that claim, all right? And that's why I said, if you're defensive on the stock market now, if you have one of these positions like SDS or something which is not working out, I told you to buy gold. That's an offset. I said don't take a loss, hedge out. Buy some gold, that's an offset, that's doing well, and go short treasuries. It's a little dicey for the moment, but I'm telling you, that trade is going to work out. The Fed is going to flip around on that, their belief in their minds that they are done. I mean, they can be done. They don't have to ever raise rates. It's not a necessity, but this is the institutional mindset of central bankers. They think they fight inflation by raising rates, and actually it just adds to it. So, all right, everybody, listen. As you know, I send out emails all day. I sent out today my analysis of the weekly petroleum status report. If you want to get that email, go sign up for a 30-day free trial of MMT Trader. Go to my website, pitbulleconomics.com. Right there on the homepage, you can get a 30-day free trial to MMT Trader. You get my emails. You will get the report, and you could take a look at all the back issues. You could download them if you want. And zombie trading, doing very, very well. That is a highly profitable report so far. We front run the zombies and we get out before they die. If you want zombie trading, go to Pitbull Economics, click on the tab that says products, and you will see you get a 30-day free trial for zombie trading. Unfortunately, the special offer of $75 a month is no longer available. However, if you are an MMT Trader subscriber, if you are a current subscriber, you still get the $70 a month rate, but do not sign up at the website. Send me an email and say, Mike, I want the 30-day free trial. I am an MMT Trader subscriber, and you will get a free trial, and you will get that special rate. For everybody else, it has gone up to $125 a month. And one guy emailed me the very first issue. He said, Mike, in one trade, I made 10 months worth of subscription fees in one trade. So there you have it. All right, everybody. Enjoy the rest of the evening. Enjoy your day. I'll see you tomorrow.